until now we have seen that what Bitcoin is in terms of very basic technicalities from a layman perspective. How do you explain Bitcoin to anyone who is just starting with it? And even from a financial perspective, there are certain labels which are associated with Bitcoin, and how do we assess those labels, and we try to analyze if those labels are true or not, right? So now we enter into a deeper field of questioning. We start questioning the field of finance and investments itself, right? We start into delving into this aspect that why do we really need to invest, right? Why is saving not enough? I'm not sure if we talked about it in the last session or not, but I always tell people that we need to do two PhDs in our life, right? First one is related to our work. We need to be experts in whatever the field of domain that we are working in, right? And the second PhD that we need to do is in investments, because if we earn some money, but if we are not efficiently able to store it or invest it, then we'll lose the money, right? Because as we have seen, banks interest rates are lower than the rate of inflation, right? So every year if you keep your money in the bank, then effectively you're losing money. So that is why we need two PhDs, right? But why do we need two PhDs? That is my fundamental question. If I am an expert in a field, let's say I'm a doctor, right? And I have studied very hard to be a surgeon, right? And I'm serving my patients very faithfully. So I'm a what can you say, a good addition to the society. I have done my work and I have earned my reward in form of money. Then why do I need to again do another PhD in investments so that I can keep that money with myself? Why am I losing money every day, right? That is a deep fundamental question that we're trying to explore here, right? So let's start. I think the very basic answer is because our money is broken, right? So it's like let's say your savings are like water, and if you keep your water in a pot, but that pot has a lot of holes, you will not be able to safely and securely hold your water, right? And that is the similar way how it's happening with our money, right? So our money is leaking financial energy all the time, because of which we need to run away from money and invest our value, our energy into some other products, stocks, bonds, mutual funds, real estate, whatever, right? So I believe that all these products have developed because our money, which is the fundamental vehicle of saving, has stopped working. Our money is broken, right?
By broken, you mean by inflation or what parameters? If you could elaborate on that, please.
Broken in the sense that it is not doing the very basic job it was meant to do, which is store value,
Okay. Okay.
right? Yeah. So this is a chart where I compare the average inflation over the last 60 years with whatever the interest rate we have right now, right? So as you can see, the inflation fluctuates, right? But on an average, the rate has been 7% in the last 60 years, right? And at this point of time, the banks offer us a savings rate of, let's say, 4 to 5%, right? Some banks might offer more than 5%, but this is the general range where people get savings, right? So essentially, what you are seeing here is that if you keep your money in the bank, you are losing money. So you are forced to not keep your money in the bank and do something with it, like do investments, right? So this is the fundamental driver of this investment industry market, right? Now let's talk about broken systems. So money is a very complicated system. Like it's economics, it's macroeconomics, investments, equities, financial industry. Like there are a lot of things going on here. It's a very huge, complicated system, right? And that is why I compare it to other complicated systems, which, when broken, cause us a lot of problem, a lot of trouble in our daily lives, right? So let's draw parallels here and see how this compares to other broken, complicated systems. So first one, let's compare it to our human body. So as you know, human body is a very complicated system, right? It's very intricately designed through the process of evolution, and there are a lot of organs in our body that do very specified tasks. And even one of the organs, if it is not working, it causes us a lot of problem. In a similar way, you can see that some people have kidney damage, right? Because of which, so kidney is an organ of the body that purifies the blood, and that blood eventually relays oxygen to various organs of our body and keeps us healthy, right? So when kidney is broken, that basic functionality is not happening in our body. So without a kidney, a human body cannot survive, I think, more than, let's say, 7 days, right? So when your kidney is broken, then you are in an emergency situation. You have to artificially replace the function of a kidney through some other device or mechanism, right? And that is what is called dialysis in medical terms. So dialysis is where your blood is taken out of your body, cleaned through a machine, and put it back into your body, right? So if a patient who is going through kidney failure, he has to do this dialysis at least 2 to 3 times a week, right? Because if he does not do that, then he'll not be able to survive. So that is an example of a complicated system. When it breaks, it causes a huge problem for our day-to-day lives. Another complicated system, cars. We all know that cars are very complicated, right, to understand. No one can easily understand and repair a car. You need to go to a mechanic. It's a specialized field of study, right? So when your car is damaged or broken or it's old, it's not able to do its basic function. It's not able to take you from point A to point B, right? And if you have such an old and damaged car, you'll constantly be under stress, under pressure, that oh my god, I'm not sure if my car will be able to help me get from place A to place B, if my car will be able to serve my family, if my car will be able to take me to work at the right point of time. So you'll constantly be worried, and you will constantly park your car with the mechanic, right, to make sure that your car is in the perfect condition, right? So that causes a lot of stress, right? And I compare these systems to our monetary system, right? So because our monetary system is broken, it is not able to store your savings efficiently, because of which you are constantly under stress. What do I do with my money? I have to invest it somewhere, and so I need to understand various investment vehicles so that I can do that efficiently, right? So this is again a complicated system which is broken, which is why we are under constant stress what to do with our money, right? So let's draw another parallel. Let's say that if the government comes and tells you that we'll demolish 7% of your house every year, and we'll use it either for construction of roads or bridges or something like that, how will you feel? Like, you will feel very outraged. Like, how can the government do this? What if government says that we need more taxes? We're taking 7% of your jewelry every year, right? So it's not that once every year government will take 7% of your whatever jewelry you have left. That will be and be unimaginable, right? Same way, what if the government comes and tells you that we'll take 7% of your stocks or mutual funds, right? We cannot imagine this happening. So I'm not sure why people are comfortable with 7% of their money taken away in the form of inflation, right?
No, that's what I think. Because this is slowly creeping into your daily life
Yeah,
over a span of years, you don't realize it. Like,
yeah,
say a 7% साल में चलता है, we are used to it. Now it's fine. But you never know when that 7 can become 10 or 17 also. And those are
right. But that,
dependent on not your
yeah,
factors. It's based on external factors and monetary policies set by people which are in no way near you. So you don't have complete control or in charge of what you are doing. That's
yeah.
that's how
Monetary
I think.
policy is a complicated topic, but before we go there, we should ask the fundamental question that why are we even okay with losing 7%?
True. Absolutely.
Right?
Yeah.
As I said, if I have worked for it, why can't I keep my savings as they are? Why do I take
Correct.
need to go to investment products? Right.
Correct. True.
So Bitcoin fixes this. How? Because Bitcoin is a fundamental innovation in the aspect of money, right? It's a money which is not under anyone's control, because of which anyone operating on the Bitcoin standard, anyone working using Bitcoin as money, will not see his savings getting diluted, will not see inflation to the level that we are seeing right now. Right. So Bitcoin has a certain level of inflation. We have discussed previously that inflation constantly keeps on going down every 4 years. And soon enough, it will go down to such an extent that you will not even realize there is inflation. It will literally be zero. Right. So that is the fundamental notion that Bitcoin is bringing to the finance space. Right. It is completely redefining money itself, based on which all other things are priced or made. Investments are made on top of money, savings are made on top of money, businesses are made on top of money. So for everything, money is the base. And if your base is broken, that then you cannot keep your building in a healthy shape for a very long time, right? So that is why Bitcoin is a fundamental innovation, and it is a disruptive innovation that will change society and finance forever, right? And if you compare it to any other asset, so let's say we do not call Bitcoin as money, we just call Bitcoin as an asset. Even then, Bitcoin is a superior asset as compared to all other options in this space. As we have seen, Bitcoin offers roughly 70% returns every year for the last 5 years. and that is way more than any other asset that you can compare it with, right? This is again the chart for a reminder that how Bitcoin compares to the returns offered by all other asset classes, right? Okay, so now we enter again a more deeper question: why do we get this thing called inflation?
Right.
Right? Is it a fundamental property of the market itself that whenever we operate in markets we will get inflation? I think no, it's not. Let's see why. So this is a very basic graph where I have tried to show how the value of your money degrades when you have constant inflation, right? So on the left hand side, you can see that we start with 500 rupees in 1960, right? And as time goes by, we see that the value of that 500 rupees degrades, and today, standing in 2023 or 2024, you can say that the 500 rupees that were there in 2060, they only buy 6 rupees equivalent in today in 2024, right? So the value of 500 rupees has gone from 500 to rupees 6 in terms of 1960 rupees, right? So that is what happens when inflation eats away the purchasing power of your money, right? So this is a very basic animation to help people understand how inflation happens in the market, right? So let's say, for simplicity's sake, there are only 1,000 units of currency in circulation in the economy, right? It can be rupee, it can be dollar, it can be Bitcoin, whatever it is, right? There's 1,000 units of currency in circulation, and against that, again, for simplicity's sake, let's say there are 1,000 units of goods and services that can be bought in the market, right? So now these 1,000 units of currency will chase the 1,000 units of goods and services. And if you take a 1:1 ratio, 1 unit of currency will buy 1 unit of goods and services. Okay. And now let's say the government decides to print 200 units of currency because they feel that they don't have enough money and they need to spend. Okay. So the government prints 200 units of currencies. So now at this point of time, right? Obviously, the market will evolve and they will produce more goods and services. So even goods and services will, the supply will increase there as well. But at this point of time, when this money was printed, there's no more goods and services to satisfy this 200 rupees or 200 units of currency, right? So what happens is these 1,200 units of currency chase the 1,000 units of goods and services, and what you get is more money, but same goods and services, which brings inflation, right? Each unit of currency is able to buy less as compared to what it was able to buy previously. That is what we call inflation. Okay? So very basic example to make people understand how increasing money supply causes inflation. Very simple, right? So now when you understand this, you need to understand that normally people perceive that the money is the constant and the price of your items, goods and services keep on fluctuating and they constantly keep on going up, right? That is the basic understanding. The basic understanding is wrong because what happens is it is not people's fault that the value of your money is decreasing, right? So if a vendor is buying some raw material and then he's processing it and he's producing a good which he's selling to the society, but if the raw material itself is costly, he cannot keep the cost with himself and sell the good at the same price that it was previously, right? He'll be in loss and he cannot run business in loss, so he has to hike his prices as well. And that is how prices go up, because the raw materials go up. And why did raw materials go up in prices? Because the value of your money went down, right? So value of goods are wherever they are. If you measure in any other unit, let's say you measure it in terms of gold. So in terms of gold, the prices of goods are where they are. But the prices of your money, which is your fiat currency, that is constantly going down, because of which you feel the pinch of inflation. Right? So that is the difference between perception and reality. Right? Who increases total money supply? Now, again, this is a very broad and complicated topic, so we might not explore it here in the interest of time. But basically, there are two entities which increase the money supply in any economy. These are either the central bank or the commercial banks. Right? If your viewers are interested in, if they have questions, we can discuss it further, maybe in our later sessions. But that is the extent of which to which we will discuss this in the current presentation. So this is an
Also,
example. Yeah.
sorry. In the previous slides, when you had mentioned about the money supply and about the money chasing the same number of goods, that again is based on something called the economic model which we currently follow, which is the Keynesian economics. So the whole world is based on Keynesian economics, and there is another school of thought which is called Austrian economics. Again, it's a vast topic, and whenever any like the audience is interested, we will touch upon those as in uh, you know info like in
Definitely,
sessions, in future sessions.
definitely, definitely.
Sure, please continue. Sorry.
Yeah. So here is one more example where we see how inflation degrades the value of money, right? So we can see that on the right hand side in 1933, 1 pound of or 1 ounce of gold coin was available for $20, roughly $21, and right now that 1 ounce of gold is available for actually $2,300. The 1770s and still an old figure. It's $2,300 right now after the price of gold went up in terms of dollars, right? People again feel that okay, inflation is there, inflation is in the society, inflation is harmful in terms of price rises. Okay, price are going up a little bit, but even our income is going up a little bit. Like we get increments every year, so it's not. I mean, net it's a zero. Maybe people feel that there's no long term harm for due to this inflation, and that is why people are wrong. So inflation, the first thing inflation does is it hikes the prices of goods and services available in the market, right? The second thing inflation does is it it promotes people to cheat and lie to their customers. How? Because people are not very open or not very approachable to the idea of price rises. People feel that, oh, you're hiking your prices, maybe you're trying to loot more, or you're trying to gouge more, you're more greedy. That is why you're hiking the prices. And people do not understand that the cost of materials itself is going up, because of which he has to keep his margin, he has to hike the prices. So they feel that price rise is bad for us, and that is why we will not go to the vendor who is hiking his prices. So because of which vendor feels that if he hikes his prices, he will lose his customers. So he tries it in another approach. He reduces the quality or the quantity of the goods or services that he's selling. So here you can see that the pack of Parle-G is going from 100 gram to 92 gram to 88 gram to 55 gram, just so that they can keep the same price for one packet of Parle-G, right? So they are not telling you that they are selling less because it is hidden somewhere in their footnotes, but what they're trying essentially is trying to cheat you, right? Because we still are under the impression that, oh, this is the same old 100 gram pack of Parle-G that we were buying, right? So this is what happens. The society gets flooded with dishonesty and deception whenever there's inflation in the society, right? And the third most important thing that happens is, just think about it, Nihal. So one simple decision that the government takes, that they need to print a bunch of money. 140 crore Indians have to fight with their employers to increase their salary just to maintain their purchasing power, right? So you see the immense amount of additional labor that it creates, additional burden that it creates for all the citizens in the country whenever government takes a decision of printing money, right?
True.
So
Yeah.
and not everyone will be able to get the hike which is equivalent to the rate of inflation, right? Some
This
people will get
this
more
yeah.
hike, some people will
This
get less
reminds
hike.
me. Sorry,
Yeah,
please go ahead. Now, this reminds me of that instance which came up in the recent past in news as well, where IT companies, the starting salary of freshers, it's on par, it's almost equivalent to what it was 10, 15 years ago.
yeah,
And that hasn't changed at all. Whereas if you
yeah,
look at the CXO's salary increase, it's doubled or tripled. And this is happening as we speak. It's not something which is not known to anyone and everyone. And do you think there's a direct correlation with this as well for that?
yeah, definitely. So the company is trying to create a perception that the entry level job still pays
Yeah.
the same amount as it was paying 10 years ago, but the reality is that the money itself has gone down in purchasing power. So
True.
you are essentially starting at a lower pace in terms of pure purchasing power, right? For an entry level engineer job. Yeah, so this affects everyone. Uh, okay, moving on. So this concept of inflation was not present all the time in the society, right? Humanity operated on gold as the monetary standard for last 5,000 years, right? We kept on moving in and out of that standard because there were civilizations which adopted another monetary standards. There were copper coins, or there was glass beads, or some other thing that people adopted, because the king or the ruler felt that okay, this was a better source of this was a better alternative to gold, because somehow gold was not really safe and secure to carry. So people diverted from the gold standard, but they fell back to it whenever they understood that gold standard is the ultimate source from where money emerges, right? So this was the most efficient form of money known to mankind for 5,000 years. But again, you can see what is happening is we are diverging from it, and we have moved now completed transition to a fiat monetary standard where our fiat money is basically paper notes, or not even paper notes, digital currency units, which are not in any way pegged to gold, right? It's just operated by the central bank. Whenever central bank says that okay, these are the monetary units that you need to use, that is what we use, right? Without any backing in gold. So why has this happened? Why have we transitioned away from gold into fiat currency? This has happened because there have been a lot of technological inventions in the last 200 years with which gold is not fundamentally compatible, right? For an example, there were railways invented in last 200 years, and railways increased the speed of travel, the speed of commerce in all parts of the world. And with that increased speed of commerce, people had to carry their gold everywhere, which was not safe, because if you carry a bag full of gold, you'll be an immediate target whenever there are thieves or there are dishonest people around, and they'll try to steal your gold at the first opportunity that they get, right? Because of it, people felt that rather than carrying gold, we could carry some paper receipts, right? And that is why this concept of gold banks evolved, where they deposited their gold with banks, and the banks gave them receipts against this gold that they had deposited with the bank, right? So that is where we started this journey. We'll explore it later in the next slide. But here, what I'm essentially trying to say is that gold is fundamentally not compatible with the technological evolutions that we have seen in the last 200 years, right? Even if you compare phone, if you're making an order on the phone, or if you're using internet, or if you're using satellites, right? So with all these sources of doing commerce, gold is not compatible because you cannot transfer gold through the same medium, and that is why you either need paper mode of currency or digital mode of currency, which gold is not, and that is why we have fundamentally moved away from gold on this while, right? So let's look at the evolution, how this evolution happened. So as I said, people started feeling that carrying gold everywhere was not a safe and secure option, because of which they started depositing their gold with gold banks, and the banks gave them receipts against the gold that they deposited, and they started trading these receipts, thinking that this is equivalent to gold, because if you give them to another trader and the trader takes the receipt back to the bank, the bank will give the trader the gold back, right? So it is in a way similar to trading with gold, right? But with a safer alternative, right? Because it's just paper. Um, but then slowly but surely, what started to happen was banks started defrauding people, because they went to fractional reserve. They issued more receipts as compared to the amount of gold that they had, right? And whenever there were runs on the bank, whenever people started getting these feelings that the banks were doing some fraudulent activity, they started withdrawing their gold. And uh, as you understand what will happen if they do not have a one-to-one backing, if they are keeping less gold as compared to the receipts, so some people will be left with receipts which do not have the gold in the bank's vault, and then the banks will start failing, right? So this is what was happening, because of which a government intervention was necessary at this point of time, and government said that okay, now you are doing fraudulent activities, because of which we need to come in. Firstly, they started issuing a standard format in which receipts were issued by the bank. That is what we see is the third icon here. It is a standard gold receipt that was issued across the country. I think this receipt is from America, but it happened across the world. So firstly, there was standardization of receipts, and then there was government intervention in the form of uh, standard operating procedures for all these gold banks. So government said that you might not be best equipped to hold this gold, which is why government will keep the gold, and government will issue the receipts, and the banks just have to use these receipts and run the banking system as it is, right? And then surely, as we know what happened, gold was completely cut off from this network, and government said that there is no gold now. It's just a paper currency that we issue, and you just have to use this currency as money, and there is no gold backing after this point of time, right? That is
Just
how we moved away
curious.
from the gold standard. Yeah.
Correct. Just curious, in Indian context, are we is the current rupee which is being floated around, is it backed by gold and other precious metals and commodities, or is it free floating based on rates like introduced by the RBI?
Yeah. So Nihal, when you say backed, backed is a very key concept. What do you say? What do you mean by backed? Is you say that there's a standard proportion that exists for the amount of notes in circulation and the amounts of precious metals or commodities that the central bank is holding, and there is no such ratio, right? The central bank does hold certain amount of gold and other foreign exchange reserves and other commodities, but it is not in any particular ratio, right? So we can say that these are just reserves that the central bank is parking with themselves for any emergency situation. But these are not essentially backing the currency, right? So the central bank will not shy away from issuing more gold, even though they have the same amount of so more money, more paper currency, even if they have the same amount of gold reserves, right? So it is not a one-to-one backing, and that is why we cannot call it as backing, right?
Fair.
Uh, so now we come to the concept of, is inflation only limited to one country, or is it a pervasive concept across all countries, all geographies? And that is what we see happening here. All countries experience inflation because all countries operate their own fiat currency, and those fiat currencies get printed time and again by their central banks, right? And that is why inflation comes about in the society. If a central bank or a government prints too much money, then there's hyperinflation. If it does not print too much money, if it prints a moderate amount of money, then that's moderate inflation. And if it prints very low amount of money, then there's very low inflation. When it comes to US, it is not that they do not print a large amount of money, but that money is circulating throughout the world and not just one country, because of which the people of that country do not feel the pinch of that printing so much, right? So even though US prints more or equivalent number as compared to any other country, but because the USD is a global reserve currency, the standards or the measurements are a bit different from, let's say, as compared to any other currency, right? So that is why the inflation is low in USD terms as compared to all other currencies, right? uh, Here we see that everyone is trying to fight inflation, right? So people think that all these investment products are basically products to make you wealthy, right? But what I differ in this kind of thought or thinking is that I tell to people that inflation is the primary driver of investment products and not making wealth or making money, right? If you look at large funds or large investment houses or large pension funds, which exist in Western countries, they are trying to maintain uh, the amount of purchasing power that they have, right? And to maintain that purchasing power, let's say there's a pension fund which has to give a certain amount of money to their holders after they retire. They have to make a certain return so that the purchasing power is maintained for the holders of that fund, right? And so to maintain that purchasing power, the pension fund is investing in the products offered by the investment industry, right? So the inflation is the primary driver of investment products and not getting wealthy, right? So people are trying to fight inflation, right? Another way to understand this, I'm not sure if we have discussed it previously or not, but still it's a good example I feel, and that's why I give it all the time. Let's compare the rate of participation in military activities in Israel as compared to India. I think we might have discussed this previously, but in Israel, the rate of participation is 100%, right? Because it's a mandate in Israel that you have to participate in military activities. But in India, it's not a mandate. You are not. It's not compulsory to participate in military activities, because of which the rate of participation in military is only, let's say, less than 1% in India of the entire population, right? So this gap of 1% as compared to 100% in Israel is because of mandate, compulsion, right? And as we have seen, when you keep your money in the bank, you're losing money, so you are compulsorily forced to invest somewhere, which is why the investment market is so huge, right? If we were not forced by inflation, this investment products would not have been so huge, and people would just be happy keeping their money in their bank wherever they did not face the problem of inflation. right? So here, what we essentially see is that each and every country is trying to fight inflation, and that is why they see such a large investment market, right? So Bitcoin fixes this. How? Again, as we discussed, Bitcoin is a fundamental innovation in the field of money. This is money which does not lose its value over time. It has very, very low rates of inflation, because of which it removes the need to have any other investment product, right? It's a fundamental innovation in the aspect of money itself.